So I've made a lot of mistakes in my past 2.5 years of investing, so I hope this video saves you a lot of time. In today's video, I'm going to show you how you can basically set yourself up to never miss another future stock market rally. I'm also going to show you some investments that will allow you to always be part of a future stock market rally. And lastly, I'm going to show you guys some charts and examples that's going to tie everything together so it can make more sense. So that being said, let's get right into it. So I'm not here to teach you how to time the bottom of the market perfectly, because honestly, that's just not realistic. And honestly, it's not worth even trying to do that. But what I am going to do is show you 3 signs that the market would typically show that are really good entry points that will allow you to catch any big future move that the market may have. And when you enter the market on these 3 signs, it's going to basically increase your probability of catching any big future market moves or having greater returns from the market. So with that being said, let's talk about sign number 1. All right, so the first simple concept that you have to understand is basically what I have on my screen right now. And what this is doing is showing you how often the market will have certain types of pullbacks. So when I say the market, I'm talking about the S&P 500. So the market will have a 5% pullback roughly about 3 to 4 times per year, a 10% correction about every 1 to 2 years, and a 20% bear market about every 4 to 7 years. So why is this even important to you as a trader / investor? Well, first, you have to understand that the S&P 500 is basically a gauge of our economy. So if the S&P 500 is going up, then most stocks are probably going up. If it's going sideways, then most stocks are probably going sideways. If it's going down, then most stocks are probably going down. So you take a look at my screen. This is a chart that's basically showing you the S&P 500 annual return over the past couple of decades. As you guys can see, most of the time, the S&P 500 is going to go up on an annual basis. It's one of the few assets in this world that you can genuinely say it will always go up, because it has so far always gone up. So now that I understand this basic concept, and I understand that the S&P 500 is a gauge of our economy and more than likely is going to go up on an annual basis, whenever I see this asset have a 5% pullback, a 10% correction, or a 20% bear market, because I know that it will go up in the future, more than likely that's going to be a really good entry to catch any big future move that could potentially happen. So to make it make even more sense, let's take a look at the charts and see what I'm talking about. All right, so we take a look at my screen. This is the daily chart of the S&P 500. And what we're going to do to test this theory that we just talked about is we're going to start in the beginning of 2025, up here until the most current date right now, which is July 11th. And we're basically going to see every time the S&P 500 had more than a 5% pullback, was a really good entry that allowed you to catch any big future move that the market might have had. So we start back here, beginning of 2025 around January. We started the S&P 500 hit the top, and it had its first 5% pullback around that February timeframe. And that 5% pullback eventually led to a 10% pullback, which eventually led to a bear market. So this is around that April timeframe whenever Trump had that big terrorist situation and was basically implementing tariffs on every country that existed, right? So we had 5% to 10% to 20%. Now, if you would have bought the S&P 500 after a 5% pullback, yes, you also would have been down a good amount, right? Roughly about 15%, because it did go down 15% more to hit a 20% bear market. But the point is that if you would have bought when the S&P 500 was down 5%, it would have allowed you to capture this big move, this big stock market rally that we had that lasted literally 7 months. If you'd have bought more when the S&P 500 came down 10%, right, which is around this time frame, it also would have allowed you to get a really good entry to catch this big stock market move. And lastly, if you'd have bought more when it came down 20%, right, S&P 500 went into a bear market, it would have been a really great entry to catch this big move that we had. So basically, yes, we went down a lot, but if you'd have gotten into any one of these entries, it was a really good position that allowed you to catch, most of literally all or most of this big stock market move that we had that lasted roughly 7 months. Now we go a little bit more to recent times, the beginning of 2026. The market topped out over here around February. We had a 5% drop, 5% pullback, which eventually led to a 10% correction. Now, if you would have bought in the market, right, at this 5% pullback and bought even more of this 10% correction, it allowed you to catch most of this move that we had up here in this recent bull market that we had that basically lasted 2 to 3 months, where the market was basically just going straight up, right? And a lot of stocks was going up with it too, obviously. So basically my point is that it's almost impossible to time the bottom of the market exactly. It is not worth trying to do that. But if you understand that this asset, that's the gauge of our economy, it's always going to go up on an annual basis over time. When you get these 5% corrections, 10% pullbacks, this 5% pullbacks, 10% corrections, and 20% bear markets, it's always going to be a good entry in the foreseeable future. You just have to be patient and let it play out. It may take months, it may even take years, but it's going to be a great entry in the long term. And this is just facts, right, from what the data is showing. All right, so I hope that makes sense to y'all. The next sign that I want to talk about is something called the Fear and Greed Index. So what is the Fear and Greed Index? This is basically an indicator that lets you know how investors feel about the market, right? So basically the overall market sentiment. And there's 5 different categories to this indication. You have extreme fear, you have neutral, you have greed, and you have extreme greed. So whenever this indicator is showing extreme fear, right, indicating that people aren't really confident in the market, typically this is a very good entry point into the stock market that will allow you to capture any big future move that the market may have. So once again, let's look at the charts and look at some examples and see what I'm talking about. All right, so taking a look at this chart, we're going to look at the last couple of times the market basically went into extreme fear. And we're going to correlate that to the S&P 500 to see if this was a good buying opportunity. So starting off first, you guys can see we basically almost got into extreme fear back here in June of 2026. We got deep into extreme fear back here in March of 2026. We got deep into extreme fear back here in November of 2025. And we got deep into extreme fear back here in April of 2025. So let's see if these were decent buying or entry points into the stock market. So the first one, right around June of 2026, we hit extreme fear roughly over here. So if you'd have got into the market here, or you'd have caught this move from 724 all the way up to 755, where we're currently at right now. So that's a pretty good return or a pretty good entry point to catch a decent move that could have happened in the future of the stock market. We go back again. So this one was back in April. This one was back in around March / beginning of April of 2026. As you guys can see, more than likely we hit extreme fear a little bit higher than this bottom point right here. But if you'd have got in whenever we hit extreme fear, it would have been a great entry point to catch this massive move that we had in the stock market. So we go back more. Right, next one was around November, late November of 2025, roughly around this time frame. If you'd have got into this market, it would have been a great entry point to catch this move that we had right here, right? So from roughly about 650s all the way to almost 700, right? That's a pretty good entry point to catch potential future move in the market. And last one, we go back to around April of 2025. Now, obviously, we probably got into extreme fear somewhere over here when the market came down 5 to 10%. But if you'd have got in at any one of these points, once again, it would have been a really good entry point for you to catch this massive move that we had in the stock market. All right, so I hope that made a lot of sense to y'all. The last sign that I want to talk about is something called the VIX. So what is the VIX? The VIX stands for the volatility indicator. And basically, like the name says, this is an indicator that gauges the expected volatility of the S&P 500 over the next 30 days. And typically, the VIX and the S&P 500 has an inverse relationship. So what does this mean? If the S&P 500 is going up, the VIX is typically coming down. If the S&P 500 is going down, the VIX is typically going up. And from what I've seen and what has been recorded over time, whenever the VIX goes over 25, this is typically a good entry point to the stock market to catch any future potential big move that the market may have. So let's take a look at the charts and see what I'm talking about. All right, so once again, taking a look at the charts, I have this red line marked out right here, and this is the 25 level on the VIX indicator. Right, what we're basically going to do is find a couple of times where the VIX went over 25, correlate that to the S&P 500, and see if that was a good entry point into the market. So it went over 25 a couple of times here from March to about the beginning of April of 2026. Went over 25 around October and November of 2025. Went over 25 around April, that April time frame of 2025, and the March time frame. And I think that should be good enough examples. Now let's correlate that to the S&P 500 and see if those were good entry points. So like we said, first time over here, back here in March / beginning of April timeframe of 2026, That's when the VIX went over 25. This was a great entry point to catch this big move in the market. We had a couple of times in around beginning, mid-October, and also late November, when the VIX went over 25. So these were decent entry points to catch a move in the market. Same thing here. But overall, if you'd have got in here, you could have caught most of the move, this big stock market rally that we had recently. We go back a little bit more, right? The VIX went over 25 multiple times around this time frame, beginning of March, all the way to around the beginning of April. Once again, if you'd have got into the stock market at this point, it would have allowed you to have a good entry point to catch most of this big stock market rally that we had last year. So as you guys can see, VIX over 25 has been a pretty consistent and reliable indication to get into the market. All right, so now that you have all this knowledge, the big question is, how do you know what to buy whenever these signs come up? And really the answer to this question is dependent on what type of investor you are, right? If you don't want to take a lot of risk, you want to take the least amount of risk as possible, you can simply buy the S&P 500 or another ETF like the QQQ, which will get you more exposure to tech companies, right? Now, you won't get a large amount of return by doing this as you would buying like individual stocks, right? But you will get a consistent return over time. Now, the next thing you can do is you can buy individual stocks that have good fundamentals and good narratives to where when the market does eventually recover, these stocks could see a huge move up. So this comes with a lot more risk and a lot more research because stocks are naturally more volatile than your ETFs. But you can still use these signs that I just explained to y'all to start getting good entry positions into the stocks that you like. So what I personally like to do is buy ETFs like SPMO and SPHQ. So SPMO is basically momentum ETF. And what this does is it picks the top 100 stocks in the SP 500 that have the highest momentums, that are performing the best. And roughly about every 6 months, this ETF will have a rebalance. So you always get exposure to the stocks that have the highest momentum and that are performing the best. SPHQ, all it does is finds the top 100 best stocks in the SP 500 within different sectors, right? So you always get exposure to the top 100 companies that are, doing the best from a financial perspective and just overall business aspect. And also I'll buy individual stocks that make sense to me, that have good fundamentals and that have a good narrative that could potentially see good returns when the market does eventually recover. So I hope this video made a lot of sense to you. All in all, you cannot predict the bottom of the market, but you can have certain signs that will allow you to have great entry points to catch big moves in the future. So I hope you guys like this video. Make sure you like, comment, subscribe, and I'll see you guys in the next one.